right, so today we're going to take a deep dive into something that hit pretty close to home for everyone in the UK,
Yeah.
the cost of living crisis.
Yeah.
From 2021 to 2024, you sent over this research briefing from July
Yeah.
2024, so
Yeah.
we're going to try to unpack it and really figure out what happened.
Yeah. You know what I find really fascinating about this period is just how everything kind of collided at the same time, right? Like global events and government policies, and even just like our own personal choices all came together to create this perfect storm.
Yeah, okay, so let's start with the elephant in the room.
Yeah.
Inflation. This research briefing says it hit a 41-year high in October 2022 at 11.1%.
Yeah, that's a massive number. And, it's not just a number on a spreadsheet. It's like you said, it's our grocery bills, it's our rent, it's literally everything.
Yeah, for sure. And I know you're kind of like a numbers person, so how do we even measure something like that? Like, how do we track inflation?
Well, that's where the Consumer Price Index, or CPI, comes in. It basically tracks the prices of a bunch of everyday things, goods and services. And that gives us a pretty good idea of how inflation is affecting the average person.
Okay, that makes sense.
Yeah.
But what caused this whole inflation roller coaster in the first place? Was it just the UK, or was something bigger going on?
Oh, definitely a global thing. Think back to the early days of the pandemic with the COVID-19 lockdowns. That created total chaos in supply chains all over the world. And then on top of that, you had Russia's invasion of Ukraine in 2022, which sent energy prices skyrocketing.
Oh, yeah, I remember those days. Waiting forever for stuff I ordered online and then freaking out when it filled my car.
Exactly. And those global shocks hit the UK especially hard because we're a net importer of a lot of goods, especially energy. So we were much more vulnerable to those price spikes. Plus, there were some kind of unexpected things that added fuel to the fire, like those Houthi rebel attacks in the Red Sea. Yeah, they disrupted shipping routes, and you wouldn't think it would matter that much, but it actually had a pretty big impact on global prices.
Wow, so even stuff happening halfway across the world was affecting us here.
Yeah, it's all connected. But it wasn't just those global factors at play. The UK also had a tight labor market at the time, which meant wages were going up, and that also contributed to inflation, especially in the service sector. So it was this complex web of economic forces all pushing prices higher.
Okay, so we've got this perfect storm brewing, but let's get into the specifics. The research highlights two things that really hit people's wallets: energy bills and food prices, especially for low-income households. So can we break down what happened there?
Yeah, so with energy bills, just imagine opening your bill one day and seeing that the price cap had jumped by 178% in just 6 months. That's what happened in 2022.
Yeah, I can't even imagine.
People were panicking, and understandably so.
It's insane. What about people who weren't even on the main gas grid, like people using heating oil? I feel like they got hit even harder.
Oh, absolutely. For those folks, the price of heating oil more than doubled in just a year. The government did step in, though, with the off-gem price cap and the energy price guarantee to try and manage the situation.
Okay, so can you explain those a little bit? How did they work?
Yeah, so the price cap basically set a limit on how much energy suppliers could charge. And the energy price guarantee kind of acted like a safety net, making sure that bills wouldn't go above a certain level.
Okay, that makes sense. So it sounds like they were trying to strike a balance between protecting consumers and dealing with the crazy energy market. But what about food prices? What caused those to go up so much?
Well, with food prices, it was a combination of everything we've talked about so far. You had the global supply chain chaos, the war in Ukraine, which was a major exporter of grain, and then you even had droughts in some parts of the world, which affected harvests.
So everything was working against us?
Pretty much. And it really hammered home the point that this wasn't just about abstract economic trends. It was about whether people could actually afford to put food on the table.
Yeah, for sure. So we've got this runaway inflation happening. What did the Bank of England do about it? Did they just sit back and watch?
Oh, no. They definitely didn't just sit back. They took some pretty drastic measures, using interest rates as their main weapon. In December 2021, the base rate was just 0.1%. By August 2023, it had shot up to 5.25%.
Wow, that's a massive jump.
It is. And anyone with a mortgage or who was hoping to buy a house definitely felt the pinch.
Yeah, no kidding. So we've got skyrocketing prices, rising interest rates. It sounds like a recipe for disaster. What was the actual impact on people's lives?
Well, it wasn't pretty. Polls showed that the vast majority of UK adults felt the squeeze of rising prices. And as we've talked about, it was the lowest income households that really struggled the most. The Office for National Statistics, or ONS, tracks how inflation affects different income groups, and the data tells a pretty worrying story.
Can you give an example of how bad it actually got for some people?
Yeah, so by 2023, only 1 in 20 private rental properties was considered affordable for someone on housing benefits.
Wow.
It meant people had to make some really tough choices. Some even resorted to things like unclugging their fridges or freezers to save money on their energy bills.
That's awful.
It was a difficult time for a lot of people. The government did try to help, though, with programs like the Energy Price Guarantee and the cost of living payments. But the big question is, were those programs enough?
That is a great question, and one that we are definitely going to have to explore further. So let's dig into those programs and other government responses in part 2 of our deep dive.
Welcome back. We left off talking about those government programs like the Energy Price Guarantee and the cost of living payments.
Right. Those were like the big headlines.
Yeah.
But did they actually make a difference?
Well, let's dive into like the nitty-gritty of how those programs actually work. So the Energy Price Guarantee, that capped energy costs for households between October 2022 and March 2024.
Yeah, I remember that vaguely. Wasn't there like 2 phases to it?
All right, so initially it capped typical annual bills at £2,500. And then from July 2023 to March 2024, it increased to £3,000. But here's the thing. Sometimes the Ofgem price cap itself actually went lower than the guarantee.
Oh, really? So in those cases, people were actually paying even less than the guarantee allowed.
Exactly. It was like a safety net, making sure bills wouldn't go above a certain point. But if the market price went lower, people got the benefit of that.
Okay, that's interesting. But I guess that safety net came at a cost, right? Like the government was essentially footing the bill for the difference.
Exactly. And it wasn't cheap. The estimated cost was around $21 billion for just the 6 months of 2022-23, and then another $4 billion in 2023-24.
Wow, that's a lot of money. Okay, so let's talk about those cost of living payments. Who were those supposed to help?
Those were really targeted at the people who were hit hardest by the rising prices. So primarily people receiving means-tested benefits and pensioners.
Like, so more of a direct relief effort.
Exactly. So individuals on those means-tested benefits got 3 payments totaling £900, while pensioner households got an extra £300.
I bet those payments were a lifesaver for a lot of people.
Yeah, they definitely helped a lot of people make ends meet. But of course, there were some debates about, whether the measures went far enough and whether they actually reached everyone who needed help.
Right. It's like trying to find that balance between providing immediate relief and making sure these programs are sustainable in the long run. So besides those big initiatives, were there any other policy changes aimed at easing the financial strain on people?
Oh, yeah, definitely. The government took a multi-pronged approach. For example, they provided support for people using alternative fuels, which was really important for those who weren't connected to the main gas grid.
Yeah, we talked about those heating oil prices going crazy.
Right, so the government introduced a £200 alternative fuels payment. During the winter of 2022-23, it was originally set at £100, but they doubled it in the autumn statement.
Okay, so kind of like a mini energy price guarantee.
Yeah, exactly, but targeted at those using different fuel sources.
Right. So with all these interventions, did we actually see any shifts in like poverty levels or income inequality?
That's the big question, isn't it? Did these programs actually lift people out of poverty, or did the rising costs just completely outweigh any help they were getting?
Right.
Well, the data kind of tells a mixed story. The support packages definitely helped to soften the blow for a lot of people, but they couldn't completely erase all the challenges.
Right.
So poverty rates kind of fluctuated throughout this whole period, and there were definitely some worrying trends.
Could you give us some more details on those fluctuations? Like which groups were most affected?
Well, let's start with child poverty rates. So after being relatively stable for a while, they actually jumped up to 27% in 2021-22, the highest they had been since 2017-18.
It's not good.
No, it's definitely a cause for concern. It kind of shows how deeply rooted child poverty is and how difficult it is to tackle even with targeted support. The good news is that they did decrease to 24% in 2020-2023, which suggests that those support measures might have started to have a positive impact.
Okay, so some movement in the right direction, but still a long way to go. What about pensioner poverty? Did that follow a similar trend?
Pensioner poverty followed a slightly different path. So after falling significantly between 2009-10 and 2019-20, it kind of stayed pretty stable at around 18%
Oh.
between 2019-20 and 2021-22.
Okay, so less dramatic swings than we saw with child poverty.
Yeah, but it's important to remember that even stability can mask underlying struggles, especially when the cost of living is constantly rising.
Yeah, that's a good point. It's not just about falling into poverty, it's also about being able to maintain a decent standard of living. So what about the bigger picture of income inequality? Did the crisis make the gap between the rich and the poor even wider?
That's a tough one to answer. If you look at the Gini coefficient, which measures income distribution, it stayed pretty stable between 2019-20 and 2021-22.
Okay, I got to be honest, I'm not super familiar with the Gini coefficient.
Right, so imagine a score of 0 represents perfect equality, where everyone has the exact same income. And a score of 1 represents perfect inequality, where one person has all the income. So the closer the Gini coefficient is to 1, the greater the income inequality.
Okay, so a higher score means a bigger gap between the rich and the poor.
Exactly. And in the UK's case, while the overall Gini coefficient didn't change that much, there were some noticeable shifts within income groups. So the top 10% of earners, they actually saw their share of the total income increase a bit, while those in the bottom 10% saw their share decrease.
Okay, so even though overall inequality might not have changed drastically.
It seems like the crisis had a bigger impact on those at the lower end of the income spectrum.
Right.
It suggests that even with the government's efforts, the crisis might have made existing inequalities even worse.
Okay, before we move on, I want to circle back to energy prices for a second. The research mentioned that wholesale gas prices actually fell quite a bit after that initial spike. What caused that decline? And did it actually provide any relief for people?
That's a great question. So that decline in wholesale gas prices was driven by a few things. Increased supply from sources other than Russia, milder weather conditions in Europe, which reduced demand, and then, just a concerted effort to conserve energy.
So basically a combination of market forces and policy responses.
Exactly. And it did trickle down to consumers. As those wholesale prices fell, the off-gem price cap also went down, which meant lower energy bills.
Okay, so at least some good news.
Yeah, but even with that decline, the price cap was still much higher than it was before the crisis.
Right, so it's still a struggle for a lot of people.
Okay.
Shifting gears a bit, let's talk about the impact of rising interest rates on the housing market. We touched on those crazy mortgage rates earlier, but what were the wider consequences for homeowners and people trying to buy a home?
Yeah, those rising interest rates really shook up the UK housing market. It created both challenges and opportunities. For example, homeowners with variable rate mortgages saw their monthly payments go way up.
And I'm sure those on fixed-rate mortgages were getting nervous about what would happen when their fixed term ended and they had to remortgage at those higher rates.
Oh, yeah, for sure. It led to some really tough financial decisions for a lot of people. And in some cases, people had to reconsider whether they could even afford to stay in their homes.
And for people who were trying to buy a house during this time, it must have felt impossible. High mortgage rates on top of already inflated property prices.
It was rough. It definitely led to a slowdown in the housing market.
So it basically cooled down what had been a super hot market.
Exactly. And those ripple effects went beyond just buyers and sellers. So landlords who were facing higher mortgage costs often passed those increases on to their tenants, which contributed to the rise in rental costs we were talking about earlier.
Yeah, it's crazy how all these economic forces are interconnected. Okay, there's one group we haven't really talked about much yet. Renters. What were some of the challenges they faced during this time?
Oh, yeah. Renters definitely got hit hard. We already talked about rising rents and the shrinking supply of affordable properties, but there was more to it than that.
Like what?
Well, one big issue was the lack of security and stability in the rental market. With rents going up so fast and competition being so fierce, a lot of renters were constantly worried about being evicted or displaced.
Yeah, that makes sense. That kind of insecurity can be really stressful.
Absolutely. It makes it hard to plan for the future or feel like you have roots in a community.
It's like you're always on edge.
Right, and it often leads to the cycle of moving from one temporary accommodation to another, which it just adds to the stress and the financial strain.
Yeah, it's a vicious cycle.
And it's important to remember that these problems tend to hit certain groups harder than others, like low-income families, people with disabilities, and ethnic minorities.
Right, so it's not just an economic issue, it's also a social justice issue.
Mm-hmm.
Were there any policies that were specifically designed to help renters during this time?
There were some attempts to provide relief, but the overall response was often criticized for being inadequate and too fragmented.
Okay, so what were some of the key areas that policymakers focused on?
One key area was the Local Housing Allowance, or LHA, which basically determines the maximum amount of housing support people can get if they're renting privately and receiving benefits. And the decision to freeze the LHA during a time when rents were skyrocketing, that became a huge point of contention.
So even though people were getting help with their housing costs, it wasn't enough to keep up with the actual cost of renting.
Exactly. It meant that even those who were getting support were still struggling to find somewhere affordable to live, which just pushed more people into poverty.
It sounds like a pretty big policy gap.
There were definitely calls for a more comprehensive and responsive system of support for renters, but unfortunately, progress was pretty slow.
It's frustrating when policy solutions don't keep up with the problems people are facing.
It is. So I guess as we wrap up this part of our deep dive, it's clear that the UK cost of living crisis was a really complex and multifaceted problem, driven by this mix of global events, government policies, and individual choices.
Right, we've seen how it played out in different ways, from those crazy energy and food prices to rising interest rates and instability in the housing market. And we've explored how different groups were affected, from families and pensioners to students and renters.
And we've delved into the government's response, looking at both the direct financial support they provided and the broader policy changes they made to try and address the crisis.
But it's clear that the long-term consequences are still unfolding. So in the final part of our deep dive, we'll move beyond those direct financial assistance programs and explore some of the broader policy responses, including changes to taxation benefits and student loan repayments. All right, so we spent the last two parts really digging into like the nitty-gritty of this cost of living crisis, causes, the impacts the government's initial response. But now I kind of want to zoom out a bit and look at the bigger picture. What about those like policy changes that weren't just about handing out money, like the systems themselves, taxes, benefits, all that stuff?
Yeah, that's where it gets really interesting. Because those kinds of changes can have a huge impact on people's lives, sometimes even more so than those direct payments. We're talking about things like taxes, benefit structures, student loan policies, all that stuff that's always in the headlines but can be kind of hard to understand.
Okay, yeah, let's unpack that.
Yeah.
So let's start with taxes. Did anything major change with personal taxes during this period?
Yeah, there were some pretty significant changes, especially around income tax and national insurance contributions. Remember, the government was trying to do like two things at once: support people who were struggling, but also keep the whole system stable.
Right, because the economy was kind of shaky at the time.
Exactly.
So what did they actually do with income tax?
Well, they decided to freeze income tax thresholds at their April 2021 levels.
Okay, and what does that mean for the average person?
Basically, as wages went up, more people found themselves having to pay income tax.
Yeah.
Or they got bumped up into a higher tax bracket.
So even if you got a pay raise, a bigger chunk of it was going to taxes.
Pretty much. The government argued that this was necessary to, keep things stable, but critics called it a stealth tax increase and said it disproportionately affected lower and middle income earners.
Who were already struggling.
Exactly.
Okay, so what about national insurance contributions? Did those go up too?
Actually, no, they went the other way. The main rates for both employees and the self-employed were actually cut.
Well, interesting. So it sounds like they were trying to balance things out a bit.
Yeah, kind of like taking with one hand and giving with the other.
Did it work?
Well, the Institute for Fiscal Studies did some analysis, and they found that about half of all employees, those earning somewhere between £26,000 and £60,000 a year, actually ended up better off because of these changes.
Okay, so a mixed bag. Some people came out ahead and some didn't. Okay, what about benefits? Did they change how those were calculated? Especially with inflation being so high.
Yeah, that was a big one. Because as we talked about, people who rely on benefits are often the most vulnerable to these price increases. So in April 2024, most working age benefits and tax credits were uprated by 10.1%, which was the same as the inflation rate from the previous September.
Okay, so a pretty substantial increase.
It was, but even with that increase, there were still questions about whether it really made up for the fact that people had already lost purchasing power.
Right, because inflation had been high for a while before that.
Exactly.
Was that a permanent change?
No, unfortunately, it was just a one-off. Later benefit upratings went back to the usual way of doing things, which often means they lag behind inflation.
So people could end up falling behind again.
Right.
Okay, what about students? They were dealing with rising tuition costs, accommodation costs, everything.
Yeah, students definitely got hit from all sides. There weren't any major overhauls of the student finance system, but there were some adjustments to loan repayments and maintenance support.
Okay, like what? Did it actually help?
Well, one big change was raising the repayment threshold for student loans, so graduates wouldn't have to start repaying until they were earning a certain amount.
Okay, so that gives them a bit of breathing room when they're just starting out.
Exactly. And they also increased maintenance loans, which is the money students can borrow for living expenses. But even with those increases, it often wasn't enough to keep up with the cost of rent and other essentials.
So some help, but not enough to fully protect them.
Yeah, pretty much.
So I guess looking back at this whole deep dive, it really highlights how complex and interconnected everything is.
Absolutely. It's not just about economics, it's about people's lives. And it shows how these policy decisions, even the ones that seem really technical, can have a huge impact on how people live and whether they can make ends meet.
Yeah, that's a really important takeaway. And for everyone listening out there, I hope this deep dive has given you a better understanding of what happened during this cost of living crisis, and maybe even sparked some questions of your own.
Because understanding these issues is the first step to finding solutions.
Exactly. Thanks for joining us for this deep dive, and we'll see you next time.